I received a query, what is the difference between simple mortgage and equitable mortgage? Actually, equitable mortgage is otherwise called a simple mortgage. So there is no difference. But there are differences between equitable mortgage and other mortgages. Okay. To start with, in this session, I'll take you through what is the difference between equitable mortgage and registered mortgage. So first of all, what is equitable mortgage? When I say equitable mortgage, it is a mortgage arrangement which involves delivery of document of title, delivery of document of that immovable property with an intention to create mortgage, So basically there are three conditions attached with it. Condition number one, there should be a debt. This debt can be a present debt, it can be a future debt. Number two, there should be delivery of documents. Delivery of documents, which is basically title of immovable property. And this delivery should happen to the lender or his authorized agent, and this should happen at notified center. And the third condition, already I said, this delivery should happen with an intention to create mortgage. So in the event of default, what can happen? In the event of default, the lender can take control over the property. They can enforce the sale of the property through auction mechanism. Okay. So that's about simple mortgage, otherwise called as equitable mortgage. Then what is a registered mortgage? We'll go through that as well. This registered mortgage is basically a complex arrangement. Here, whatever the mortgage you create, that should be registered with sub-registrar office. And in this mortgage arrangement, the borrower will be transferring the full ownership rights of the property to the lender. It means in the event of default, this mortgagee, that is lender, here borrower is called as mortgager and lender is called as mortgagee. And in the event of default, this mortgagee can enforce his right to sale. It means in the event of default, lender can dispose the property in any manner what they deem fit, and it means lender has more rights than a simple mortgage. Very quickly, let's look at the difference between equitable mortgage and registered mortgage. The first difference is in terms of cost that are involved. If you take equitable mortgage, there is no registration requirement. It does not involve any legal action. So what you have to do is you just have to buy stamp paper, you have to write down the memorandum of deposit, and you have to deliver the document. But if you take the registered mortgage, here you have to visit the sub-registrar's office, SRO, and you have to pay for registration. So there is going to be registration charges, and these charges can go as high as 5%. It varies state to state. Next, let's look into lender's rights. See, in case there is a default, under equitable mortgage, what the lender can do? Lender can go for auction. Lender has got the right because of equitable mortgage, so lender can go for auction, sell the property. And if sale proceeds are greater than the loan outstanding, then whatever the excess amount, lender will pay the borrower. And if the loan is settled fully, then without any much of formalities, they will return the document as well. That happens in case of equitable mortgage. Whereas in case of registered mortgage, since the mortgage is registered with sub-registrar office, the lender is going to get priority, or lender will have more right over other parties. It means if there is going to be any dispute on the property, who will get the preference? It's the lender. It is registered with sub-registrar office. So if there is going to be a dispute, then ownership will get transferred to lender only. Let us also look at what are the rights of borrowers. In equitable mortgage, you don't have registration with the SRO. So if there are any dispute, whom borrower can approach? Borrower can approach CERSAI. CERSAI means Central Registry of Securitization, Asset Reconstruction and Security Interest. Whereas in case of registered mortgage, borrower's rights are more protected because that mortgage is registered with sub-registrar. Okay. So if there is going to be any dispute regarding ownership and all, everything is clear because it's registered with SRO. Thank you so much. We have come to the end of this webinar, and I'm sure you would have really derived value from this short and crisp webinar. If you wish to continue this learning journey, I have an amazing opportunity for you. I have published several courses on banking and financial analysis area, each course costing 2000 rupees. But for you, I'm going to give you a special offer. Here we go. Banking credit courses bundle. This includes course number 1, banking credit analysis process. It's a comprehensive course with 200 plus lectures. It covers financial analysis, working capital, term loan, LC, BG. It's a comprehensive ever course. Then we have course number 2. That is how to carry out financial analysis as a banker. This is going to focus exclusively on financial ratio analysis, cash flow analysis, and fund flow analysis. Then comes course number 3, how to carry out term loan appraisal and analysis as a banker. It's a comprehensive course focusing on the technical aspects around project finance and term loan. These are all the topics. Then comes course number 4, how to prepare CMA report for bank loan through 8 sections. This course will take you through entire CMA report preparation process for bank loans. Then we have course number 5, how to read balance sheet. So if you are a non-finance person, this course will give you complete insight into balance sheet, how to read them, how to interpret them, how to analyze them. Okay. Then we have course number 6, how to read CIBIL report. By taking this course, you will get a complete picture of CIBIL report reading process. Then we have course number 7, how to prepare cash budget for bank loans. This course will help you to understand the concept of cash budget, which is widely used in short-term lending like auto credit facilities, letter of credit and all. So far, I have introduced 7 courses of 1999 each. It means 7 courses of value 13,993, but you are going to get it only for 2,599, and it is not yet over. I'm going to give you some more bonus. Course number 8, collateral security is a comprehensive study. Course 9, how to carry out credit risk rating for non-trading entities. Course number 10, in this course you will learn banking credit analysis through various case studies. So now it is 10 courses of value close to 20,000, but you are going to pay only 2,599. It is not yet over. Some more bonus. Course number 11, how to read audit report. Course 12, this focuses on letter of credit, and course 13 focuses on financial analysis in very short duration. So you have 13 courses of value close to 26,000 rupees, but you are going to get it for just 2,599. So it is basically 7 main courses, and you are going to get another 6 complimentary courses, 6 courses as bonus. So overall it is 13 courses of value close to 26,000 rupees. It's 1,500 plus lectures. You get lifetime access for all these pre-recorded courses. You can access them in desktop, laptop, mobile, iPhone, iPad, and the overall cost is around 26,000, but you are going to get it only for 2,599. So this is a once in a time opportunity for you. Enroll now. I'll see you inside the course.